Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always, Ritu Singh. These are the top headlines from the startup world. B2B e-commerce platform Udaan announces the closure of its Series G round at $114 million. This round was led by M&G Investments and Lightspeed, with participation from other existing and new investors. The fresh capital will be deployed to strengthen Udaan's category and customer footprint with a focus on its FMCG business. D2C men's fashion wear brand Snitch bags 340 crore rupees. The fundraise was led by 361 Asset with participation from Ravi Modi. Will use the funds to fuel expansion and increase its retail footprint. Pepperfry gets 43 crore rupees from existing investors like Norwest Venture Partners and Goldman Sachs. The infusion follows a previous $23 million round in 2022. While revenue declined in FY24, the company has narrowed its losses and postponed its IPO plans, focusing on growth and profitability amidst competition from major e-commerce companies. A new BCG QED report reveals fintech is entering its strongest phase yet, with 21% revenue growth, rising profitability and AI-led disruption driving the next wave of innovation and global expansion. Maharashtra's FDA revoked Zepto's food license in Mumbai's Dharavi, cites non-compliance with food safety standards after a surprise inspection. Those were the headlines that we're tracking for you this evening. But on what's brewing today, Maharashtra's Food and Drug Administration has deepened its crackdown on quick commerce companies. This comes after FDA officials conducted a surprise inspection at Zepto's Dharavi dark store and found unhygienic conditions. Zepto's license for that dark store has now been suspended. Shilpa Ranipeta joins us now with the details. Shilpa, take us through the steps taken by the Maharashtra Food and Drug Administration and the sort of, impact it has on quick commerce companies going forward.
Well, hygiene conditions in all the quick commerce stores are now under the scanner. And like you mentioned, it started with Zepto's license for the Dharavi dark store being suspended by the Maharashtra FDA. And this was after an inspection revealed multiple violations. There was fungal growth seen on some food items. Products were stored near stagnant water. Cold storage temperatures weren't as per standards. The floor was wet and filthy. And food items were found scattered and stored in an unsanitary way. Even expired products they were not clearly separated from non-expired stock. And this is a store that just received a license about 3 months ago in May. Now, in a statement, Zepto says that it has launched an internal review and that it is working closely with authorities to ensure full compliance. Zepto says that it's committed to fixing the lapses, strengthening its processes, and is taking all necessary corrective measures to resume the operations as soon as possible. Meanwhile, Maharashtra's FDA has widened the lens. It's not just about Zepto. Food safety officers have been directed to inspect the dark stores of all quick commerce players, including Blinkit and Instamart. And they've also been asked to issue notices to these platforms to follow hygiene and food safety norms. And any violations, we're told, will lead to improvement notices or even license suspensions. So yes, while quick commerce is expanding fast, it's also facing growing regulatory scrutiny. Back to you.
All right, Shilpa, many thanks for those details. Now, a bold new bet on Bharat's startup potential. US-based venture firm Expert Dojo has launched a dedicated India cohort, pledging $100,000 each to over 10 early-stage startups. With a $15 million India-focused fund in play, the accelerator aims to go beyond just capital, offering global investor access, hands-on mentorship, and a clear path to Series A. From AI to EVs, urban hubs to remote corners, Expert Dojo is hunting for India's next breakout stories. So what's the game plan behind this ambitious push? Let's find out. Joining me now on the show is Ashutosh Kumar Jha, the general partner at Expert Dojo. Ashutosh, thank you so much for taking time out and being here with us on Startup Street. Before we get into who you're going to invest into, if you could sort of explain to us what inspired Expert Dojo to sort of launch an India-dedicated cohort at this time. What unique opportunity does the Indian startup ecosystem present that made this the right moment for focused investment?
First of all, thank you so much for inviting me here. It's a pleasure. So really appreciate it. A little bit about the background of Expert Dojo. We are based in California. We have invested in close to 300 companies worldwide. And our inception year was 2019, and since then we have been investing $50,000 to $100,000 as first check, and then follow-on investment up to $1 million sector agnostically. And then from our US-based fund, we have invested in close to 30 companies, not close to, but exactly 30 companies in India. Sector agnostically, to name a few of our portfolio company in India, Beehive Co-working Space is one of them, Mugafi, based in Delhi, Consumer AI, and all those companies that were based out here in India. So talking about, to answer your questions regarding what inspired us exactly to launch our cohort, because, India has been, like for a long time as a back office for a lot of like IT-based companies, even though the stats that you see in the US, like a lot of CTOs used to be Indian or Indian origin, but now the things is a paradigm shift. We as an Indian, we are becoming the executives, rather than CTO, the Indians becoming the CEOs in the United States. And same is happening here in India as well. Like literally, we are no more we are no more the, what do you call it, like the back office of the IT companies. We are the strategic hub, the R&D hubs and stuff like that. So the kind of things happening in India, it's crazy. That inspires us a lot to kind of open our first office space outside the US, that is in India. So we thought, okay, this is the right time and right opportunity. And the people are saying this decade is for India, but we believe this century is for India. So here we are at the right timing and right opportunity to invest a lot.
Absolutely. India's startup ecosystem is prime for investment right now. But if you could sort of explain to us, how does this cohort differ from traditional accelerators and early stage funding programs that are already existing in India? Beyond the capital, what hands-on support will startups actually receive?
Well, a lot of discussion these days is popping up that venture capital model is broke. And then we don't say ourselves as a VC. We call ourselves as a growth hacker first, VC second. So we don't just write check. Check is the first thing. Of course, we believe in you, take the money. But what we come up with is the strategic support, the growth support that we provide hands-on. We have built a relationship with millions of dollars of perks and discounts provider, service provider, mentors, and all of these things will be there. It's just not the check. Our main mode is to kind of hand-holding. We don't believe in a spray and pray model. Once we put the money, our follow-on investment opportunity is $1 million later on, right? Sorry, can you hear me okay?
Yes, absolutely. Continue. Go on.
Okay. So first check, 100K, follow-on $1 million that we give after 3 years of the first check. So you see, we don't diligence the company just for 1 month. Technically, we touch point on the company from numbers to personal connection for 3 years. And then our main mode is to put $1 million. And when you get the $1 million, when you are kind of like growing at 200% year over year and stuff like that, the growth rate that we're going to support. And then every 6 months, we do the audit on the companies and all. So we are kind of a little bit different from the existing funds out there. We do a lot of growth support, like help them with GTM, scalability and stuff. With our India fund plan specifically, our mode is to kind of not just put the capital locally here, but after investment, we want to take our companies to the US. So we're building the Indo-US investment landscape, if you see.
So you're building in India for the world is what you're saying over here.
Of course. That's our intent.
And as you pointed out, you've committed this $100,000 each to about 10 plus startups, right? What are the key criteria you'll be evaluating while selecting these founders? Have you sort of, identified any firms that are looking exciting for you? And when will the deployment start?
The first the cohort that we are thinking of to invest this into the 10 companies is going to be in the end of August or mid-August. And then we are already actively seeing the companies, like in last couple of days, we spoke to pretty much 50 plus companies already, and we are still speaking. So we are expecting around 500 to 600 companies that we're going to speak with before we make the decision, the 10 companies that we're going to invest in. And then what is your other question, by the way?
I was just wondering when you're going to start the deployment, and how do you select these companies? Like, what are you looking for in the founders?
So at early stage, as you just asked, valuation and all those, like fancy number doesn't really matter to us. We make decision based on the founder's market fit. Why you are the right founder to make the right company. So it's founder's first mentality that we come up with, and then if you're the right person who can make this amazing company go. If you're a bad executor, then take the money from us. So yeah, the founder's first mentality is something that we basically focus on.
Sure. And you mentioned that you have a sector agnostic approach, but you are looking at verticals like AI, EV, and SaaS. If you could sort of take us through why these are the sectors that excite you out here in India?
Well, as I mentioned earlier, you go to any Indian families, there is one engineer who's either coming out or applying for an engineer degree, right? And if you have seen the pattern, a lot of engineering colleges are now putting very specific computer science courses like AI, blockchain, and stuff like that. So what India is getting ready for is like the next revolution. Like we are getting so much having so much deep expertise in the sector specific thing, like AI, specifically, if you mentioned that we have that expertise to build in, right? And AI is going nowhere. If you're not using AI, if you're not having any use case of AI in your workspace, you're lagging. You're falling apart, falling behind, right? So we thought of, okay, like let's go ahead with this. Now in any, even though we are sector agnostic, but AI also can be used sector agnostically as well. So let's say whatever you are building, if you have any AI segment and stuff, our focus is not just the AI, but sector agnostic, as I mentioned earlier. But then anything that is tech and very easily scalable, that can be done by using something called AI, and blockchain and stuff. So we specifically very much interested in any intersection of sectors like AI and blockchain and stuff like that.
Right. And India's tier 2 and tier 3 cities are seeing a surge in entrepreneurship, right? How is your fund sort of positioned to support founders from these regions, as they call it, the Bharat opportunity?
Well, historically, if you have seen our data, like whatever the investment that we did, we had no biases that the companies should register in Bangalore or Delhi or Pune and stuff like that. Our companies came from Bihar. Our companies came from Jaipur. Our companies are based in Bangalore. Our companies are based in Delhi, right? So we have done that unconsciously. But right now, our approach is we're going to have we have a scout program as well. We have our scouts are like hunting for the deals from tier 2, tier 3, tier 4 places as well. So we are going to decentralize in India as well when it comes to finding those companies, have someone locally represent expertise in that state and bring those deals. So we definitely see next unicorns are coming not out of just Bangalore or Delhi or Pune, but of course, tier 2 cities, what's happening here in India, the kind of development that we are seeing and the rise in the entrepreneurship.
Absolutely. It's a big opportunity there in the tier 2 and 3 cities. All right, Ashutosh, thank you so much for taking time out and being here with us on Startup Street. And moving on, entrepreneur and wellness enthusiast Mira Kapoor has launched her second entrepreneurial venture, bringing ancient healing and advanced healing practices under one city roof. CNBC-TV18's Rachna Dhanrajani caught up with her at Dhun, Mumbai's first in-city wellness center, to find out why she believes that true self-care shouldn't require a vacation. Take a look.
In the middle of Mumbai's buzzing Bandra neighborhood, a quiet sanctuary has opened its door. This initiative by Mira Kapoor is an attempt to redefine what wellness can look like in a city that never sleeps. Ayurvedic treatments to treatments like cryotherapy and infrared bed, Dhun Wellness tries to bring the ancient and the advanced all under one roof. Thank you so much, Mira, for joining us on CNBC TV18. We're here at the launch of Dhun Wellness, located in the heart of Bandra. Tell us more about it. Tell us the initiative. Tell us the idea and the vision behind it.
So welcome to Dhun. Dhun is the first in-city wellness center of Mumbai. The idea behind creating Dhun is for people and urban dwellers to be able to experience deep care and healing, preventative health care, right in the comfort of their own homes, integrate it into their lifestyle instead of just having the fleeting results of a getaway or a resort. So we have 5 pillars. We have wellness programs, body therapies, longevity, healing, and Ayurveda, all under one roof.
Awesome. Was there a personal epiphany that you had that you need to do this, or what was the trigger or the encouragement that led to the foundation of this?
I think I've been someone who's listened to her body. I've always adopted alternative medical practices to find my balance. And I've done an annual gut cleanse for the last 7 or 8 years. However, because I have young kids and I've had my kids are now 9 and 7, I could never move out of the city to do that. So I found a hack. You know, I would get the kit, the medicines, the therapist. I would do it at home for the last 7 or 8 years. But I felt like there needs to be a place like this in the city because there are more people like me. There are more people who want to get better, get well, harmonize with their body, and feel like they can do it consistently over a period of time in the city.
Right. Apart from the geographical aspect of it, that it's right in the middle of the city, how would you say Dhun Wellness sort of differentiates itself from other wellness centers?
You know, typically, if we look at healthcare, either we're going into conventional scientific healthcare with respect to hospitals that's focused on disease management, or you're looking at an aesthetic space like a salon or a very typical spa. There is no place that brings the following together: in-city, luxury, and holistic. You have 2 out of the 3. Dhun Wellness has all 3. So you're able to use a cryotherapy chamber in the same place as you're able to get a Nadi Pariksha done, in the same place that you're able to do a 7-day women's health program. So the key differentiator here is that it is holistic wellness under one roof with visiting masters like a medical therapy management practitioner who would look at your nutritional deficiencies, supplements, give you a program for that, a Japanese facial master who would come in for a week, help you with sculpting, lymphatic drainage, reflexology. So it's almost like a holding house of global talent, accessible to you, and all different modalities of healing.
Right. What is it that you're trying to do differently to capture the market share here? Because at the end of the day, we're looking at it from a business perspective as well.
Absolutely. So I think having all these different verticals under one roof is the key differentiator that we have. Creating a space and a community where you can engage with like-minded individuals as well as like-minded practitioners. Always having an inflow of different doctors, different experts, as well as the membership programs that we have that enable you to be consistent at Dhun. So with respect to the market, it's 4.5 lakh crore is the size of this wellness market in India. And I think it's got very strong tailwinds. There are people who are looking to find places like this. And I wanted to create this place, and Bombay is not the first one. We're going to have many more.
I'm sure people would be waiting as soon as you open the doors, which will be very soon. But thank you so much, Mira, for
Thank you for
CNBC
having
TV.
me.
With ancient rituals and cutting-edge technology, this space is a reminder that wellness is more than luxury. It's a way of being, and that's perhaps what Mira Kapoor's vision is with this preventative and recovery-focused wellness center. This is Dhun. I am Rachna Dhanrajani for CNBC-TV18.
On that note, it is time for us to head into a short break. But coming up next, fintech-focused global venture fund QED Investors is looking to double down on India with investments over $250 to $300 million in the region over the next 5 years. A special conversation with its founder on the other side. Stay tuned.
Well, on our Investor Eye Corner today, we've got fintech-focused global venture capital firm QED Investors that's looking to double down on India, which remains one of its most important markets in the Asia-Pacific region. The VC has invested just under $220 million across Asia, which is primarily in India, and expects to deploy an additional $250 to $300 million in the region in the next 5 years. Globally, QED has $4.5 billion under management with more than 30 unicorns in its portfolio. It has backed Indian startups like OneCar, Jupiter, Upswing, and Refine. Nigel Morris, the co-founder and managing partner of QED Investors, joins us now to break down the investment playbook and the India strategy. Nigel, many thanks for joining us here on CNBC-TV18. India, of course, has been a core focus for QED in Asia. Start by giving us a sense of how much of this $220 million has been deployed in India across how many fintechs, and what kind of potential do you see for further investment here?
That's a great question, Ritu. Thank you for having me. We've invested about $220 million over the last 5 years here in the APAC region in general. We've invested in companies like OneCard, Refine, Jupiter. We've made about 11 investments all in all over these last 4 or 5 years. And as we look forward, we don't really allocate a certain number of dollars to the region, but we'd expect to invest 250 to 300 million over the next 5 years. I mean, that's subject to horse racing the ideas in this region against ideas in Latin America, against Nigeria, against the UK and the US, and the global stage.
All right, with more than $220 million deployed in Asia and plans to double that in 5 years, what are the sectors or sub-themes within fintech like embedded finance, insurtech or wealth tech are you most bullish on when it comes to India?
Ritu, you hit on a number of the major themes there. Look, so QED is all about financial services. That's all we do. So that would be wealth management, insurance, it would be payments, it'll be lending, it would be crypto, it would be banking as a service, it would be embedded finance. So we look across the full vista of all of those ideas. We tend to invest at the early stage, so it'll be seed and A, although we now have a growth fund, which enables us to get into the B to C stage. So we're interested in all of those areas. As we look at India specifically, we find ourselves really drawn to embedded finance, which we think is really powerful. We see that credit card penetration in India is extremely low. It's in the low single digits. And of course, we're drawn to the macro phenomenon that is quintessentially India of 6 and 7% GDP, the largest population in the world now, and of course, a digitally enabled, young, educated population of about 80 million people that now have earnings over $10,000 a year. So we're really long on the opportunities that exist in India, and of course, the talent pool is amazing. The tech is phenomenal. A progressive regulator. There's just lots of things to really like.
Well, Nigel, as you just said, QED has traditionally focused on early stage fintechs, but it is now actively participating in Series B and C rounds here. What will the average check size look like, and what really triggered this strategic shift?
Look, we're in our second growth fund. We had our first growth fund that was started about 4 years ago. And the logic was really simple. It was to take the top quartile of our early stage companies and be able to double down and invest in the best companies that we've already seen through our early stage fund. And about 2/3, 3/4 of the investment dollars that we have in the growth fund are follow-on investments from our early stage. So we really are taking advantage of asymmetric information. We know the companies, we've seen them go through the thick and thin, we've seen them be able to compete in the marketplace. And we have the opportunity, because of the relationships that we've built with the companies, to be able to add a bit more capital and have a bit more ownership. So it's a logical extension of the QED business model. The average check size would be about $20 million, usually without a follow-on. So there'll be something in that region. And look, we're looking for companies that are beating the rule of 40, who are at the B and C stage, who are profitable or darn near profitable, where they have grown-up management teams and really good governance and fantastic unit economics and net promoter scores that you would really feel great about. And companies that have really shown that they have that product market fit and they're now scaling rapidly. We were able to take 18 of our portfolio companies off to New York about 2 months ago, where we gave them a boot camp workshop on how to go public. And the fact that we've been able to follow our companies into the B and C stage gives us permission, in a sense, to be able to start to talk to them about what an IPO exit might look like.
Nigel, finally, let me ask you then about exits. Looking ahead, is QED hoping for a few large exits from its fintech portfolio or a broader portfolio of category-defining companies?
Look, we have a duty to our LPs to give them a solid return, and we're very focused now on looking to get liquidity out of our portfolio. We have not seen many IPOs, particularly in the US, for the last 3 years. There were not something like 60 IPOs in the US in fintech land in 2021, and there's been a very few number in the last couple of 3 years. We, by the way, have seen eToro go public. Circle is about to go public. Klarna maybe by the summer, we see just a whole range of really now very advantaged, grown-up, durable business models that are going public in the US. That will create some liquidity in the system, which I think our LPs will really appreciate. I'm a passionate believer, Ritu, that fintech actually levels the playing field, creates more transparency, enables consumers and small businesses to be empowered. Our investments in companies like Nubank and Credit Karma, in Klarna, these are companies that have changed the face of financial services worldwide. And it's just fantastic to be able to invest in so many talented entrepreneurs who are actually half of my age and twice as clever as me, who are actually going out and building these wonderful businesses.